So Mayfield is the consolidation of 16 long day care centres located in and around metropolitan Melbourne. The centres in total represent 1,360 registered places, and if we look at an average size per centre, it's around about 85 children. The portfolio represents an excellent mix of mature centres as well as a number of trade up and development centres that will give us good growth. If we turn our mind to their profitability, all centres were profitable at FY16, except for one, and that's only because it only began trading from February of this year, so it's only traded for 6 months at that point. In terms of the occupancy across the group, our mature centres sit at around about 79%. Our forecast sees them growing to 83%. With respect to our development centres, occupancy sits at around 64%, and we're looking to take that to 70%. So collectively, that'll give us an average occupancy across the group of around about 80%. Mayfield's supported with a tremendously well-experienced management team, both at the board and at field level. Sitting on the board, we have myself, Peter Lowe's our chairman. Peter's got 15 years experience of being a non-executive director of both public and private companies. And then Michelle Clarke, who will be both an executive director and our quality advisor, who has an exemplary track record in running childcare centres since 2005 and really driving the quality performance across those centres. On the ground level, we have also very well experienced people. Our development manager, she has over 20 years experience in Victorian childcare, and Elise also has 10 years experience. So the quality of the team is really quite strong and very experienced in childcare and very focused on driving the quality aspects, which are absolutely vital to increasing the occupancy of childcare. We have developed our own quality improvement program that we'll be applying right across the centres. It's been structured in context of the National Quality Standard, which governs all childcare in Victoria, and the initiatives contained within them are well tried and tested, and we'll be looking to apply them across the board to increase our occupancy, both 17 and beyond. In terms of my own background, I've been involved in childcare since 2005. I first started with the development and construction of greenfield sites down in the southeast corridor of Melbourne, and then later moved into managing underperforming centres in Camberwell and then later in Cranbourne. Concurrently, I was working with Tabcorp, most recently as their General Manager of Retail, overseeing their 800-strong retail network in Victoria, and then prior to that, General Manager of Development with oversight of the business transformation and integration projects. So collectively, with the experience of multi-site management, the understanding of the childcare sector, I'm well placed to be able to manage the businesses. I understand integration, and I understand what it requires to improve the occupancy and quality of childcare centres. So I think the first thing I'd say is that all these centres actually compete on a local basis, so they're competing within their local community. So we're not drawing analogies on a competition level between other listed companies. It's more about what exists in that local community area. What distinguishes us from others, and certainly at the beginning, we're acquiring these centres. What will distinguish us in the future is the quality programs that we bring in place, and that's where Michelle Clarke and the intellectual IP that she brings from 11 years of driving quality in business, and that very tangible result of implementation of quality to drive occupancy is that clear differentiator. The first phase of the investment strategy will be very much around the implementation piece and the consolidation of the initial portfolio. So that'll be focused around integration of end-to-end wagering rostering systems to manage your cost base, occupancy systems, and then also internal control systems to manage the expenditure that will occur at the centre level. The other aspects of it is very much in that short term is as I've talked already, the quality improvement program, which will really much drive the occupancy levels up. So in that first pass, very much organic growth. Moving forward, two areas of growth will come from One is considered and targeted acquisition, so we'll be looking for, in the short term, other centres in Victoria, though we will look across the border should there be an opportunity to buy a group of centres. So it fits with our management structure of being serviced by an area manager. But the thing about probably something that makes us different to certainly to the other larger listed groups is one or two acquisitions of one or two centres will actually make quite a significant difference to or an impact to our bottom line, whereas when you have 480, 500 centres, you really need to buy a lot of centres before you actually see the results at the bottom line. Why should people be looking at Mayfield? I think first of all, if you look at the construction of the portfolio, we've got some very strong, high-performing centres. They'll actually secure the base. So we've got a group of centres there that probably represent 40% of our EBIT. So you've got a very strong base of performance, and then you've got centres that are performing well, but still got really great scope to be able to trade them up to higher performing centres. We know that we've got the quality program, so through the implementation of our integration program, coupled with quality, what Mayfield will have is really exportable IP that we'll be able to take with us to support our expansion strategies through acquisition or expansion through managed services. The other piece is that we know what we're doing, and I think it's critical. Parents will assess Mayfield on its knowledge. It'll be a centre by centre assessment of whether we actually know what we're doing, and with 50 years experience in management and the board, we'll be able to very quickly demonstrate our understanding of childcare and what it means to deliver quality care and service to families, and that's what they're looking for, with the added benefit of value-added services that young families in Australia are looking for today. So I think, if you sum it up, you've got a good mix of a portfolio that's got stability in it and opportunity for growth. We've got a very strong management team, well experienced, and we've got our own embedded IP that will be able to underpin our growth going forward.